single trade. Trading is a systematic thing. You take hundreds and thousands of trade over a period of years in your career. And if you are systematic, if you are disciplined, then you eventually make very much big amount of money. Discipline, money management is the crux of becoming rich. Not getting or finding a spectacular trade that would return 60% or 70% in a single trade, taking a lot of risk. So suppose I can risk 2000 rupees, but I take 2000 quantity. So 1% price fluctuation takes away my entire lost amount. And then I'm thinking, okay, let me have 5 rupees stop loss. I'm changing decision in between the trade. And then eventually when the price goes down 10%, I'm cutting down loss. So this kind of suicidal behavior during a trade, where you change your stop losses, your targets, when you are already into the trade and market is going against you, or over trading, the amount trading more than the amount that you are permissible to do within the given fluctuation limit of the stock. Those are the reasons one is not able to make money very consistently. Otherwise, if you are good at technical analysis, if you are good at fundamental analysis, whichever way you want to trade, and if you are managing your money, managing your stop loss very well, then in all probabilities that you will make very good amount of money if you remain disciplined. So this is the third point that I wanted to discuss, that whatever profit you book it systematically in a part by part, and let your good profits run for longer period of time with a trailing stop loss. The fourth point that I want to discuss is about reinvesting your profits. Suppose you are making some amount of profits. You can do three things. You can overtrade. Suppose your 100 rupee account has become 150. One thing you can do is that increase your trading position by 1.5 times. You may get elated with your success and you may lose the discipline or ignore the discipline and increase your trading size by 3 times before, though your amount is just 1.5x from the beginning. Then in a negative phase, you would lose a lot of money. This is not the way to do. Another thing you can do is that you can take out that 50 rupees and just save it for yourself with the bank account, or you can actually consume 20 rupees or 30 rupees of profit out of it and let the 30 rupees remain in your trading account. It depends the money that you have invested into trading, what is the actually source of that money and how important is the money for you. Initially, if you are making profit and if you are a very new trader, it is very important to take out your trading capital, and the investment amount once you get out, then you can grow your capital. But if you have some other sources of income and you think that that amount that you have made profit, you can easily let it grow, you can then let it grow. But another way is that you can take part out of it. As I said, 10 rupees or 20 rupees, suppose you take out of it, and in a 1 lakh amount, if 1,50,000, you take 20,000 rupees, buy a watch for you, enjoy that, buy a gift for your wife, do something very spectacular that you wanted to do, and let that remaining 30,000 rupees remain in your account and let it grow. Ideally, it should depend on you, but actually you should at least have some of the retained profits in your account, and with the same discipline grow your account. So if you retain 30,000, so make your position 1.3x. Earlier you were taking 400 shares, now you buy 520 shares. So similar way you grow your capital on a time bound basis. And one important thing is that reinvesting in profit can be in some long term stocks. If we look at stocks like Reliance, like Larsen & Toubro, like ITC, like Hindustan Unilever. So these businesses have given spectacular return if we had spotted them very early in their growth cycle. There has been many stocks in the market which have grown 100 times, 200 times over a period of many years. So it was great if you diversify from short term or medium term trading, and if you put some amount that you earn in your longer term growth stocks which you can spot early, not only matured companies, but the companies in which you think has the potential to grow, then you can have that kind of a passive growth through investment apart from your short-term trading. So reinvesting your trading profit is very important. And another aspect of that is, don't get very much excited with the profits that you earn. At the end of the day, it is only the game of probability. You have had a very fantastic run. You may have a lean patch also, and that may affect your account, and that may take down your account. So don't get overexcited, don't overtrade.